We are a team of enrolled agents and certified public accountants, and the name of our firm is Taxagon. And we help tech workers, individual investors, and businesses plan their income taxes, file their taxes, and also do bookkeeping services. And our goal for individuals is to help you guys learn more about tax strategies, because you might be seeing ads from TurboTax to file your taxes for free, or most of the people say that, "Hey, there's nothing much to do with my individual taxes. I just have to pay the IRS or I'll get the money back from the IRS." But what most of you don't realize is your taxes might go as high as up to 50% once you start making 350,000 plus. You'd be owing a federal tax rate of 37%, and state and social security and Medicare altogether would go up to 50% in taxes. So our goal is to educate you with tax strategies. There are multiple tax strategies focused on individuals and hundreds of tax strategies for businesses. So both of these are healthcare savings accounts designed by the government to incentivize us to save for our health. The government likes to give us tax benefits for activities they're trying to promote and incentivize. And in their promotions, savings for healthcare is a massive one for the IRS. So the idea of a flexible savings account, right off the bat, I want to tell you I hate this name. I find the name quite ironic because even though it's called a flexible savings account, it's quite inflexible when you really dig into it. So, how does an FSA work? The FSA, like, you need to have an employer that offers it. Without an employer, you cannot have an FSA. And if your employer is offering, then any employee can sign up if offered by the employer. And it allows employees to defer a percentage of their salary up to $3,000 for single and $7,700 if you're a family. And yes, this money is not taxable. So every year you can put this money into your flexible savings account and use it for medical expenses. But there is a catch in it, right? That's the reason why I was saying that I don't like it, or it's not flexible. Although name says that flexible savings account, it is quite inflexible. Like, it's a use it or lose it type of account, which means if you fund it with $7,000 at the start of the year and don't use any of it at the end of the year, you can only transfer about $600 to the next year. If you're someone that either has like almost no medical expenses, or you don't have large medical expenses that will blow through your deductible, it may be worth considering a high deductible health plan for a HSA, because HSAs have three separate tax benefits. The first tax benefit, once you put the dollars into a HSA, like, you can put around $4,000 if you're single and $8,400 if you're joint. But in a HSA, once you put that money, you can keep building the account value. You don't lose it at all. So every year you can be spending in putting $8,500 into the HSA, and none of it is taxed to you. It's tax deferred. And unlike FSA, you will carry forward the money year over year. So, for example, in that specific year, you have put $8,400 into your HSA account and you have not used any single dollar for your qualified medical expenses, but still you will be carry forwarding that money to next year. And the second tax benefit is your money compounds and grows tax free. So this is more powerful than 401k. So you can invest like a 401k account from your HSA account, and whatever income, the returns that you get, either you invest in stock or any other asset, and if the profit on that asset is tax free, so you don't need to pay any tax. You will just be paying tax on the base contributions that you're doing. Whatever interest that you get, that is all tax free. That's the reason you should invest dollars in your HSA account. One of the biggest problems, latest survey and research shows that most of the American HSA accounts, 90% of the dollars in the HSA are actually not invested. So many people don't know that they can invest from their HSA account, and whatever returns they get are all tax free. So if you have a HSA account, invest that money because it grows and compounds entirely free of taxes. The third benefit is you can always use it for qualifying medical expenses and pay for that out of your HSA account at any point at all. For example, in 2024, you have a HSA account and you contributed $8,400 into the account, but you already have some medical expenses and you did not use your HSA account. After a couple of years, until your retirement, you can claim back those expenses. And to give you guys a quick recap, an FSA is a flexible savings account. The name is confusing because it's a use it or lose it type of account. So if you don't spend dollars from an FSA, you can only roll over about $600 and the rest is lost. A HSA, health savings account, is awesome because it's triple tax advantaged. Tax deduction upfront, tax-free compounding, and growth. Make sure to invest it since most people forget. So there you have it. FSA and HSA, great accounts to consider if you are wanting to save for your healthcare. Questions we would be happy to answer. Again, our goal is to help you guys save money on taxes. If you guys are not making enough money, but still you can schedule a personalized call with us because it's very, very beneficial. Most of us are first generation engineers in the United States, and as first generation, we might not have enough financial knowledge. If we were in our own country, not be an immigrant in this country, but if we were in our own country, then we have our parents or our cousins or our friends guiding us on doing the right set of financial advice, right? But whereas in US, it's very tricky related to immigration or related to taxes. It becomes very tricky, and we want to help you in optimizing your taxes. So if you think if any of your friend or your relative would be beneficial through us, then we would be happy to talk to them and help them out too. Thanks a lot for taking the time to join this call, and we'll also send you the recording of this call. Thank you so much, guys.